Just like we do with our calls, usually just some real estate facts and stats from what happened in the last few weeks type of thing. And let's start off with our friends at ATTOM Data here and the monthly foreclosure activity report that they have. And this is for the month of August, and we're in the middle of September here now. So to start, there's about 36,000 US properties with foreclosure filing. Again, that's the full pipeline. That's letter in the mail, default notice, scheduled sheriff sale or auction at the courthouse, and then the bank actually took it back. So that's the full pipeline, 36,000 houses. And it's down 1% from a month ago, but 18% from a year ago. And the stat here is an interesting quote here is the August marked the sixth consecutive month of year-over-year increase in the US foreclosure activity. And it's actually the third straight month where we had double-digit annual growth. We're seeing more and more properties come on to these different auction sites that where we would bid on. Makes sense to me on what we're feeling and what the data is saying. And from a rate perspective, the worst foreclosure rates, so meaning like the highest foreclosures are Nevada, South Carolina, and Florida. I think these are 3 last month, if I recall correctly, but no surprise there in Florida. You go to Zillow and hit actives, it's red dots everywhere, meaning they're for sales. We've talked about Florida ad nauseum the last few months, changes there. So that's the foreclosure rates. These are actual counts, but these are like 3 of the biggest population states in the country. So that's just the facts there. And then from a foreclosure completion, so like an REO, what we focus on, lenders repoed 4,000 and change US properties for the month of August. That's a 5% increase in last month and a 41% increase from last year. That's a big one there. Yeah.
That tells you about the economy right there. That's a big ticker on the economy and jobs.
Yep. Again, nothing surprising there, especially on the REO stuff. Like the last few months, we've seen some larger datas of new properties coming on. And in addition to that, you have the auction companies also reducing their opening bids and reserve numbers too on a lot of these properties, which then makes it more realistic for us to purchase these things because it's where we need to be at. Anything to add on this one, Paul?
It's interesting at California, and that's always been a hot market and it's a very expensive market, but it's really taken a turn and it's really getting hit with foreclosures right now. That one's been the most interesting one to me.
Yeah.
And then no surprise with Illinois. Cook County has bad reputation, right? So it's very difficult apparently to foreclose, to evict, all those different things there, which is Chicago. Cook County is Chicago, the city there. And there's not a lot of lenders that operate within there. Like a lot of big lenders do not lend. A lot of the big asset-based lenders, I should say, They stay out of Chicago, that market, because it's difficult. But that's a lot of REOs that are going on there. So they're obviously letting them go.
Yeah. All right, let's jump gears.